Hey traders, how can you profit from trading the announcement of the CPI numbers? I'm going to show you how, at least one of the ways. But first of all, be aware of one thing. When trading the CPI numbers or the interest rate decision, the market is extremely volatile, and I do encourage you to be very cautious in what you're doing. But here's the trick. The CPI numbers came out at 2:30 Danish time. This is 8:30 US time, 1 hour before the market opens. And I have now zoomed into the 1 minute chart so you can actually see the 1 minute candle here when the CPI number came out. And you can see that they actually span over 142 points in the matter of 1 minute. So that's a crazy span. Even if you adjust and go to the 2 minute, you can still see that it's a really long candle with a long wick both on top of it and on the bottom of it. But for clear thing, let's go back to the 1 minute just for one sake. So the thing is, when I saw this candle and this was done, I have tried to do several things before. I tried to maybe just put a short and put a stop of 30-40 points, which is possible unless you get run over. But in this case, I have seen this happen several times, meaning that there's a candle with a very long wick and a relatively small body. Normally you could consider this green bar here as a very bullish signal. And on top of that, the story of the candle is actually that the sellers pressed the price very long down, but the buyers pressed it all the way up and even ended in green. But I have noticed that several times during especially CPI numbers, there's a lot of manipulation going around. And often, this is the trick, often the tail, the very wick that you can see here, let me circle around it so you can see it, there, often has to be revisited in price. So what I actually did is I started by marking in, I can go to a little bit 2 minute time frame so you can see here, I started by marking in the previous lows of the market. I mean the closest lows that I have. So these 4 lines was the closest lows that I had, because I knew that if there was some kind of liquidity sweep, the price would go to this area or to this area in order to take the stops out and then perhaps probably turn around. Alright, back to the 1 minute chart. So what I saw, normally actually I have to say I trade the 2 minute chart, the 3 minute chart, not so much the 1 minute chart. But for this case, the signal on the 1 minute chart is that this explosive move upwards did not get any continuance. On the contrary, it got a red bar that actually goes back more than 61% of the green bar. And therefore, when I see this signal on the 1 minute, I can actually say, okay, this will be the exception where I will actually go and trade on the 1 minute if necessary, because as I told you, I'm quite sure that this long wick down here is going to be revisited in somehow. And as you can see, the wick in itself is 99 points long. So when I saw this red bar here, I was getting ready to short, because when it closed, I was quite sure that there's not going to be another green bar going up. You never know, I cannot predict. I'm just saying that this is really hard to make follow through when you have a retracement which is this deep from the red bar. So I actually shorted into the market and took a couple of minutes and say, okay, we have now hit at least the first level of support. It doesn't need to hold, but this is, I could see that when the market started to bounce like this, I said, okay, this is enough. So here's actually the result. I will show you the result because I did take the trade. You can see here, these are London time, so therefore there's a difference. You can see 1:32 to 1:39. So that basically means 2:32 to 2:39. I entered a Wall Street trade. I entered it at 45,605 and I exited at 45,529. So it was a trade that was about 7 minutes long, and it gave me 76 points in total. And it's often that when you see these long tails, wicks, call them whatever you want, that they get revisited like the price did, and then it finds some kind of consolidation like it also did, and then often, especially when it's CPI numbers, the price goes back, how do you say, to the journey that it was already making. And actually, when you look at the 1 minute here, it might look a little bit crazy, but if we flip to the 2 minute, my God, you can actually see here you have a elephant bar, as it's called, bouncing off the support. Then you have a pause bar, as I call it, and then you have what's called 3-bar play or red bar ignored. You can call it whatever you want. But this signal down here is setting, there's no more red continuance. On the contrary, there's green to follow. So therefore, an entry here from this level here, I will mark it for you guys, there, with a stop. Let me see, with a stop, just down here, would have been very secure to make, with a limited risk of about 15 points. And as you can see now, the market returned to where it was, 19 points. On top of that, there's even a 3-bar play more here. And there's technically also what's almost like a 3-bar play here. At least what you can see from a price action perspective, and this is what I teach on my channel, that if you take this elephant bar, no 50% was damaged. If you take this one, no 50% was damaged. If you take this elephant bar here, no 50% was damaged. Even though the bar goes through with this long tail, as long as nothing closes underneath 50% of the elephant bars, it's no problem. And the same thing happened up here again. So technically, you could have taken the trade one more time the other way around. But I was recording this video, so for me, it was a little bit hard to do. Okay, I hope you really much enjoyed this tip, and if you want to know more about the power of price action, how to learn how to trade these 3-bar plays and the price action in general, go check out the links below, because I will link to all my price action videos. Thank you so much.